It's been a stellar set of numbers delivered by Mahindra and Mahindra for the quarter gone by. Not only did they manage to beat the street expectations as far as the bottom line figure is concerned, but even margins have been very, very impressive. Revenue came in at 11,590 crores, bang in line with street estimates. Profits came in at 1,311 crore, largely flattish on a YOY basis. This is the profit figure, which is before the exceptional item. If we don't include that, they reported margins of 17.8% versus 14.1%. Very, very impressive. Management also said that it's been the highest ever margins for the tractor business. So very good growth coming in, 17.8% on a M&M plus MVAML level. In fact, they also added that it's the first time ever that this tractor segment has had negative working capital, which led to high cash generation. In fact, if you look at the auto business, which already had negative working capital, even that further became higher in terms of quantum. And yes, because of the spurt in demand, they've also had to see some market share erosion at the same time, given the fact that the supply was not adequate in the early days, in the early months after lockdown. So because of that, they saw a market cap erosion, but it's not very significant, or the company is not really taking it as any negative development or anything to worry about going forward. They said they will build back inventory once the festive season is over. So Q4, going into Q3, Q4, they will start building up and restocking. They will prioritize exports as well once again post the festive season, because in the last couple of months, given the domestic spurt in demand, the focus was largely on the domestic market and meeting the demand scenario there. The farm equipment segment's global business also saw marked improvement. They're hoping to build on the momentum there. Auto business has seen significant ramp up in volumes. So Thar is going to be their building block to redefine the entire SUV lineup and the SUV offerings that M&M has. The focus will now be on domestic core business. They want to build moat through platforms like Krishi, etc. for their farm equipment business, and scale up the auto business quite a bit as well simultaneously. They've done a good job as far as the cash management is concerned, margins is concerned, while at the same time maintaining safety of their employees, they said. They've seen significant reduction in exceptional cost from international subsidiaries as well. In fact, this time around, they've announced exit for two subsidiaries, two global subsidiaries, one being Jippa Aerospace, the other being Gen Z. SYMC, another subsidiary where they've decided not to infuse any further funds. As far as SsangYong is concerned, there's no new development there. They're still in discussion with potential investors. But definitely they are sticking to their earlier decision of not deploying further funds into SsangYong anymore. They want to continue to improve the global business, redefine the domestic auto segment as well. There are some delays on the Ford partnership because of COVID-19, but sooner or later that will come back on track as well. They're seeing healthy demand right now. They're quite optimistic about how demand will be, or not only right now, but in Q3, Q4 as well. They expect it to sustain quite smartly. For the entire farm industry, they're expecting low double-digit growth for the entire year. That's the guidance that they've given for the industry as far as M&M is concerned. So largely, I'd say good set of numbers. Commentary has been encouraging. They're quite optimistic about the next couple of quarters as well. But yes, they have talked about how government spending, rural demand is essentially anchoring the economic activity, and turnaround, however, in the urban markets will come up with a lag. Given the positive rural outlook and demand, not only has farm segment done well, but even the pickup segment has shown a positive momentum. Auto industry operations is now near normal, despite some isolated pockets where they saw some supply chain constraints, which still remain a bit of a concern. It's been a strong quarter for the entire tractor industry. M&M clearly has benefited a huge deal given that spurt.